Hello, and welcome to Donut Investment. This analysis is for silver as of 10th of July 2026, with a spot price of $60.30 an ounce. The full report is on donutcn.ca. A long-term buy on a sixth straight annual deficit, but downgraded from strong buy. The squeeze has unwound, industrial demand is falling, and the metal is rich after halving from its peak. Hold, and accumulate on weakness. The structural case is a sixth straight annual deficit, 46.3 million ounces, widening from last year, with mine supply that can't respond because 70% of silver is a byproduct of other mining. That's genuinely bullish, but the demand base is cracking at the top. Industrial demand fell 3% to a 4-year low, and solar makers are actively engineering silver out above $50. Strong, in other words, but no longer strengthening, which is the heart of the downgrade. Silver is not cheap. Even after halving, it sits near its 2011 peak in real terms, having done a five-fold move off the base earlier this decade. The gold to silver ratio is about 68, only mildly cheap versus gold, and the easy catch-up trade is largely spent. The cost floor around $25 is far below spot, so it offers no support anywhere near here. On valuation then, the metal is fair to rich, not a bargain. The tape is a broken parabola. Silver is below its 20, 50 and 200-day averages. Momentum is weak, and it's 51% off January's high. But there is a silver lining in the positioning. Speculative longs have washed out to about 14,000 contracts. The froth is gone, which means less forced selling fuel and room to rebuild. So the downside from here is a purge, not a rout. And that's why the call is hold, not sell. The risks are the mirror of the case. Silver is the higher beta cousin of gold, and half its demand is industrial, so it's doubly exposed. Higher for longer rates and a firm dollar keep the monetary leg pressured. That's what halved it. A slowing economy would hit the industrial half harder than gold, and the bull's own engine is self-limiting. High prices keep pushing solar makers to thrift and substitute silver away. These are why the medium-term call came down to hold. Now weigh the risk against the reward. The bull case is roughly 41% above today, the base case the most likely about 3%, and the bear case a fall of about 20%. So you are risking about 20 to make 41. So, our call on silver, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donut Investment at donutcn.ca. The link to the full report is in the notes below. Have a great day.